Good afternoon, folks. My name is Mark Allen. I'm a certified financial planner and an enrolled agent. I have a wealth management practice and a tax planning practice in Folsom, California. Today I want to talk to you about mortgage interest rules. I know, totally exciting, but we've had a big change in them for the new 2018 tax law. So I have a lot of people asking me, can they deduct their mortgage interest? So let's get on with it. We have a new tax law in 2018 that deals with the mortgage interest rules. And a lot of my contacts and clients and whatnot are fearful because they heard that the mortgage interests will be limited on loans of up to $750,000. Furthermore, they won't be able to deduct their equity line mortgage interest either. And some even heard that they couldn't deduct interest on their second home. So let's dig into this. Let's first talk about the mortgage interest rules on primary loans for your residence, and then we'll jump into the equity loans that we're talking about. So what we have is a new law in 2018 for new mortgages that are taken out in 2018 onward. No other homes, assuming no other homes. You're going in and you're buying one home. You are limited to the interest on a mortgage of up to $750,000. Pretty straightforward. The problem is we're on the cusp of this new law, and so some people are have a residence currently, and they may have a loan of $1 million, for example. Well, luckily, the law has grandfathered in the old loans from before. So those folks carrying a loan of over $750,000 are still able to deduct the mortgage interest on up to $1.1 million. So that remains. But if they purchase a second home or a new home and sell the other one, they're going to be limited to the $750,000. So let me dig into that second home thing a little bit more. I have clients who are buying a second home now, and their first mortgage is $500,000 on their primary residence. Can they get a loan for $750,000 on the new second residence? And the answer is no. But they can deduct the interest on up to $250,000 on the second, because the combination of the existing $500,000 mortgage and the new mortgage, let's just say it's $250,000, brings us at $750,000 total. So by adding on another mortgage for a second home, the total deductible amount going forward is $750,000. Okay, so we've covered that. Now equity lines. Let's talk about that. Equity lines, and I like to call that are used for what I like to call trains, planes, and automobiles. These are expenses that were paid off of the equity line to pay off credit cards, pay for vacations, pay for maybe cars or other things like that. That's no longer deductible. Even if it was existing prior to 2018, still they've eliminated it. It's non-deductible. However, if you use an equity line of credit to pull money out to build a pool or to put a new roof on your house, do some internal improvements, build on a garage, those are called improvements to the home. And those are still deductible. Even if it was carried on prior to 2018, we can grandfather that in under the old rules. It's as if it's part of the first mortgage, okay? So you can maintain that, but again, the most critical part of an equity line, and what I don't see people doing, is keeping track of the spending. Here is the strategy for you. And what I mean by that is they say, oh, $30,000 for the pool, $20,000 for the kitchen, and I think it's $15,000 for the car. Really have to keep track of how much was spent off that equity line and what it was spent for, especially nowadays. Because since the equity line is no longer deductible for the planes, trains, and automobiles side of things, what I find is some clients are using that equity line for investing. And if you can trace that money to the investment, you can deduct the interest as an investment expense, an investment interest expense. So it even becomes more important to start tracing this stuff because they've eliminated the deductibility of so many things that we want to capture the deductions that we are still allowed to do. Anyway, that is the deal on mortgage interest and the updates on that. Please subscribe, like my video, post some comments down below, and I'll try to answer them. Thank you very much.